Good morning, everyone. Good morning, sir. Ang topic namin na reporting for today is continuation sa report nila ni Tabaranza, Chapter 6, Capital Gains Taxation. Special tax rules in capital gain or loss measurement. Meron siyang dalawa. Number 1 was sales of stocks. Then number 2, tax-free exchange. Wassail rule is wassail of securities is deemed to occur when within 30 days before and 30 days after the losing sale of securities, the taxpayer acquired or enter into a contract or option to acquire the same of or substantially identical securities. Capital losses on wassail by non-dealers is securities are not deductible against capital gains because they are effectively unrealized. So, ang wassail daw is a transaction in which an investor daw na naghahanap na mapababa ang kanyang tax benefit by selling or losing security at the end of calendar year para ma-claim ang capital loss on taxes. So, wassail rule is the taxpayer did totally let go of the shares. The immediate reacquisition of the shares make the loss theoretical or a feigned loss. So, yun nga, pwede mo, wassail rule is, kumbaga, feigned, ito ay ang pagpandaraya temporarily or pagkukunwari na pwede mo siya munang i-fake yung financial statement mo para ma-lesser ang pagbayad ng tax temporarily. So, wassail rule is a securities for purposes of the 61 days rule includes stocks and bonds. The wassail rules has significance on the recognition of reportable capital losses on domestic stocks sold directly to buyers. For the purpose of this rule, substantially identical means that stock or bonds of the same class with the same features. A common stock is not substantially identical to a preferred stock. Participating and non-participating preferred stocks are not substantially identical. So, stocks and bonds are considered securities for the purpose of the 61 days rule. So, the wassail restrictions now have an impact on the reporting on capital losses on domestic stocks sold directly daw sa buyer.
We have here an illustration. In 2021, Mr. Donald had the following transaction in the shares of Talisay Incorporated, a domestic corporation. Noong January 5, he purchased 10,000 shares with a price at the price of 4 pesos. Therefore, the cost is 40,000. And on March 1, bumili ulit siya ng share na 10,000 and yung price is 4.10. Therefore, the total cost is 41,000. On March 18, ibinenta niya yung 10,000 shares sa halagang 3.80. So ngayon, Mr. Donald uses the FIFO method in costing security transaction. When we say FIFO, that is first in, first out. So, in wassail sale under the FIFO method, the 10,000 shares binenta in March 18 came from the first 10,000 share bought on January 5. So, the capital gain or loss on March 18 shall computed as follows. So, the ceiling price, which is the 38,000, less natin yung cost of shares, yung kung magkano natin binili noong January 5 na 40,000. Therefore, the capital loss now is 2,000. So, pursuant to the wassail rule, the 2,000 capital loss on the sale shall not be deductible in the computation of the annual net capital gains in 2021 since the shares sold were fully replaced within the 61 days period. So, the adjusted basis of the replacement share acquired on March 1 shall be, una, the purchase price, which is the 41,000, Add the deferred loss on March 18 wash sales, which is the 2,000. Therefore, the basis of replacement share is 43,000. Now, what if by specific identification, the 10,000 shares bought on March 1 were the same shares sold at a loss on March 18, 2021? In this case, the 2,000 capital loss is not a wash sale loss since there is acquisition of replacement share within the 61 days period. Hence, the capital loss is deductible against capital gains. So, in illustration 2, we have acquisition of identical shares after a losing share in 2021. Um, Mrs. Rachel had the following transaction in the stock of Santa Rita Corporation, a domestic corporation. Noong January 4, bumili siya ng 10,000 shares na nagkakahalaga ng 20. Therefore, the total cost is 20,000. Then, noong February 28, ibinenta niya yung 10,000 shares niya na nagkakahalaga ng 18 pesos kada share. Therefore, yun ay nagkakahalaga ng 180,000. And on March 4, bumili uli siya ng 12,000 shares na nagkakahalaga ng 16 pesos. Therefore, yung 12,000 niya sa 16 pesos ay 192,000. Ngayon, what if the replacement share are less than the share sold? Assuming that the share bought on March 1, 2021 were only 8,000 shares for 32,800. Only the portion covered with replacement shares, with replacement shares shall be disallowed. The portion without replacement cover is a deductible realized loss. Thus, the capital loss shall be split as follows. Yung deferred loss, so yung 8,000 shares divided by 10,000 shares times 2,000, so that is 1,600. Then, the deductible losses, or yung 2,000 shares natin divided by 10,000 shares times 2,000, that is 400. Therefore, ang capital loss ngayon is 2,000. Let's proceed. The adjustment basis of the replacement share acquired on March 1, 2021 shall be. So, di ba? Purchase price is 32,800. I-add natin ngayon yung deferred loss on March 18 wash sales na 1,600. So, the basis of 8,000 replacement shares ngayon is 34,400. Ngayon, what if by specific identification, the capital gain or capital loss shall be computed as follows. The selling price na 180,000, less natin yung cost of shares natin na share sold natin na 200,000. Therefore, malaki-laki yung capital loss natin, which is the 20,000. So, since there is a full replacement cover within the 61 days period, the capital loss shall be deferred and included as part of the cost of replacement shares. The basis of the replacement shares ngayon, purchase on March 4 shall be, una, the purchase price na 192,000, i-add natin ngayon yung deferred loss on wash sale, which is the 20,000. So, magkakaroon tayo ng basis of 12,000 replacement shares na 212,000. Next, what if replacement share are less than the share sold? So, assume instead that only 7,000 shares were bought on March 4. So, kanina 8,000, so ngayon 7,000 for 110,000. In this case, the capital loss shall be split as follows. Deferred loss, 7,000 shares, divided by 10,000 shares times 20,000 shares, times 20,000 pesos, so that is 14,000. The deductible loss, which is the 3,000 shares divided by 10,000 shares times 20,000 pesos, so that is 6,000. So 14,000 minus 6,000, so the capital loss is 20,000. The adjusted basis of the replacement shares acquired on March 4 shall be the purchase amount, the purchase price, which is the 110,000, add the deferred loss on wash sales, which is the 14,000, ito. Basis of 7,000 replacement shares is 124,000. Now, let's go to illustration 3. the acquisition of identical shares before and after losing sales. In 2021, Mr. Wendell had the following transaction of Naga Corporation. Noong January 4, noong January 4, bumili siya ng 15,000 shares na nagkakahasa sa halagang 20 pesos. Therefore, 15,000 times 20 is 300,000. Then, no February 15, bumili ulit siya ng 5,000 shares sa halagang 21 pesos. Therefore, 5,000 times 21 is 105,000. Now, February 28, binenta niya yung 12,000 shares niya sa halagang 18 pesos. Therefore, that is 216,000. Noong March 4, bumili ulit siya ng 3,000 shares sa halagang 16 pesos. Therefore, that is 48,000. Noong April 1, bumili ulit siya ng 7,000 shares sa halagang 14 pesos na lang. So, that is 98,000. Now, in this illustration, the deferred loss na 8,000 shares divided by 12,000 shares times 24,000 pesos, that is 16,000. Deductible loss natin, i-deduct natin yung deductible, i-add natin yung deductible loss. Paano yung nakuha? 4,000 shares divided by 12,000 shares times 24,000 pesos. So, that is 8,000 pesos. So, ang capital loss niya ngayon is 24,000 pesos. So, the adjusted basis of the replacement shares acquired on February 15, 2021 shall be purchase price niya, which is the 105,000. So, balikan natin. Ito yun. Then, add natin yung deferred loss niya na 5,000 shares times 8,000 shares times 16,000 pesos. So, that is 10,000 pesos. So, the basis now of 5,000 pesos replacement share on or 5,000 replacement shares on February 15 is 115,000. Now, the adjusted basis naman of the replacement shares acquired on March 4, 2021, so magkano nga yun? March 4, that is 3,000 sa 16. So, the purchase price is 48,000. Add natin yung deferred loss niya nga 3,000 shares divided by 8,000 shares sa 16,000, that is 6,000. Therefore, the basis of 3,000 replacement share on March 4 now is 54,000. Next, we have illustration 4. So, no replacement share in 61-day period. On January 18, Mr. Real bought 10,000 shares of General Luna Corporation for 100,000. Then, on February 6, 2021, he sold the same share for 95,000. So, magkano na yun? 100,000 niya binili, binenta niya lang ng 95,000. Then, noong March 28, 2021, bumili ulit siya ng 5,000 share sa halagang 55,000. Note that March 28 acquisition is beyond the 61-day period. Kay ilang days lang ba dapat ang 61 day niya? 2 buwan, so lumagpas na siya. Period. Since there is no acquisition of replacement share within 61-day period, the 5,000 is not a wash sale loss, but at deductible realized loss against capital gains from the sale of domestic stocks directly to a buyer. So, the basis of the shares bought on March 28 shall be 55,000.
Hello, I'm Cinderella Saling. Continuation po ito ng report namin. Rationale of the WAS sales rule. A WAS sales rules is intended to prevent taxpayer from finding temporary losses which could enable them to manipulate their reportable taxable net income. The WAS sales rules is not applicable to dealers in security as it is a normal way of business for them to buy sell stocks and as a result realize gains losses within short duration of time. tax-free exchange, mayroon pong dalawa, corporate reorganization and initial acquisition of control. Yung corporate reorganization, no gain or loss shall be reorganized on corporation or in its stocks or securities if such corporation is a party to reorganization and exchange property in pursuance of a plan of reorganization solely for stocks or security in another corporation that is party to the reorganization. Ma-considered po natin yung reorganization na tinatawag kung ang isang corporation po is a party to merger or consolidation. Exchange property of sold for stocks in corporation which is a party of merger or consolidation. Pangalawa po, if a corporation is exchanged solely for all a part of its voting stocks in exchange solely for all parts of the voting stocks of corporation, which is control of acquiring corporation. Ito po ang tinatawag na yung isang company po mag-merge sa isang another company din. Pangatlo po, yung corporation exchange souls for all part of its voting stocks or exchange solely for all the parts of the voting stocks of corporation which is control of acquiring corporation of substantially all of the properties of another corporation po. Ang ikaapat, yung recapitalization and arrangement whereby the stocks and bonds of the corporation are readjusted to as amount, income, or priority, or an arrangement of all stockholders and creditors to change and increase or decrease the capitalization or debt of the corporation or both. 5. Reincorporation or formation of the same corporate business with the same assets or the same stockholder surviving under the new charter. Merger po occurs when one corporation acquire all the substantially all of the property of another corporation. Yung consolidation po when two or more corporation merge to form one corporation. The gain or loss of the share for share swaps pursuant to a plan of a merge or consolidation will not be recognized for taxation purpose. In share swap pursuant to a plan or merger or consolidation, the shareholders of the acquired corporation will be integrated in the acquiring corporation. The share of the acquired corporation will be called in the replacement with the share of the acquiring corporation.
Balikan muna natin sandali yung merger at consolidation. When we say merger, so ang isa sa mga halimbawa niyan is yung BDO at ang One Network Bank. Diba, binili ng BDO ang share of stocks ng One Network Bank and the name that the One Network Bank into BDO. So, yung bali dalawang company or dalawang company. Then, pagdating naman sa consolidation, halimbawa, meron tayong company A, company B, and company C. So, ngayon, nagkaroon ng bagong pangalan, which is the company ABC. So, halimbawa. So, ayun yung kaibahan ng merger at consolidation. Now, let's proceed to the illustration. We have here, Mr. Fernando was acquired to surrender his Zambales Incorporation shares in exchange of BIR shares with total of fair value of 1,200,000 pursuant to the merger of Zambales Incorporation and Bataan Incorporation. So, the Zambales share previously purchased by Mr. Fernando for 1 million. Now, fair value of BIR shares received, so that is the selling price, na 1,200,000. Ito. And yung cost of, ile-less natin ngayon yung cost of symbolic share exchange, which is the 1 million. Ito. Therefore, the indicated gain now is 200,000. The 200,000 pesos indicated gain is not taxable exchange, involves in tax for tax for stocks. So, yun nga yung mga nandun kanina sa sa definition ng reorganization natin. Then, similarly, the indicated loss shall not be likewise recognized. So, dito, gain tayo ng 200,000. Pero kung sakali in-loss na siya, hindi pa rin siya magigain ng indicated loss shall not be likewise recognized. Then, the 1 million pesos tax basis of Zambales share where shares given shall be carried over as the substituted basis of BIR share. Next, we have illustration. Next, we have another illustration. Sa share swap for control naman tayo. The subsico is 60%, ito yung subsico, 60% owned by its parent's company, the Parinco, ito, and 40% by an investor. Ngayon, investor. Ngayon, subseco also bought and held and as invested share of Parenco and Invesco. Subsequently, Subseco acquired 30% share ownership in Afico. Ito. And 60% share and from ownership in New Subseco. Ito table natin. So sa share acquisition, we have share acquisition, shares given in exchange, and income tax status. So, yung 60% control in New Subseco, so ang Subseco-owned shares is exempted or exempt from income tax. Then, ang investment in Parinco shares is also exempted. And another is, yung investment ni Invesco shares is also exempted. Now, yung 30% share of Afico, sa Subseco, own shares is exempted. Then yung investment in Parenco shares is taxable na. And another is yung investment in Invesco shares is also taxable. So, yun, pag tinable natin ito. Then, let's proceed to another illustration. Assume that after the acquisition, 60% New Subseco and 30% of Afico, the Subseco made a second share swap for another 10% to New Subseco and 25% to Afico. So, si Subseco now have 70% controlling interest and 55% controlling interest in Afico. Ito table ulit natin. In our table, we have share acquisition, then share given in exchange, and income tax status. So, yung plus, yung inad na 10% New Subseco, yung doon sa increase for controlling interest niya, ito. So, si Subseco own shares is exempted. And then the investment in Parenco shares is also exempted. And yung investment in Invesco shares is also exempted. Now, let's proceed to the additional 25% shares of Afico, which are resulting to 55% controlling interest. So, yung Subseco-owned shares is exempted. Then, we have investment in Parinco shares is also exempted. And another is the investment in Invesco shares is also exempted. So, the initial acquisition of control, so when we say control, that means that ownership of stocks or unit of participation in such a corporation of which amount to at least 51% of the total voting power of all classes of stocks entitled to vote. Now we have an illustration. Mr. Gapan exchanged in his share in Cabanatuan Corporation, costing 2 million in exchange for the share of Maharlika Corporation with a fair value of 1,800,000. The transfer resulted in Mr. Gapan acquiring 51% ownership in Maharlika Corporation. The total consideration received or selling price is 1,800,000. Ito. Then, babawas natin ngayon yung cost of Cabanatuan share, Cabanatuan Stock Exchange, which is the 2 million. So, the indicated loss ngayon is 200,000. Now, let's proceed to BIR Tax Clearance. So, when we say BIR Tax Clearance, no registration of any documents transferring real property shall be affected by the Registry of Deeds unless the Commissioner or his duly authorized representative has certified that such transfer has been reported and the capital gains tax or creditable withholding tax, if any, has been paid. So, the certificate for purposes of this legal requirement is referred to as CAR or yung Certificate Authorizing Registration. We have three natures of the 6% capital gains tax. First is the presumption of capital gains. So the 6% capital gains tax applies even if the sale transaction resulted to a loss. Gain is always presumed to exist. The basis of taxation is the selling price or fair value, whichever is higher, not the actual gain. Pangalawa is the non-consideration to the investment. The capital gains tax applies if the sale is involuntary or is forced by circumstances such as in the case of expropriation sale, foreclosure sale, disposition by judicial order, and other form of forced disposition. It also applies to conditional sale and facto diretto sales. And lastly is the final tax. The capital gains tax shall be withheld by the buyer against the selling price of the seller and remit the same to the government. Now, the scope and applicability of the 6% capital gains tax. If within the Philippines, the 6% capital, again, in our table, if within the Philippines, if the location of our property is within the Philippines, ang taxpayers is lahat ng individual. And then for the corporation, only the domestic corporation. Then pag ang property naman natin is located outside the Philippines, hindi taxpayer, hindi siya sa individual at hindi rin naman sakop ang corporation. The 6% capital gains tax is applicable. So again, the 6% capital gains tax is applicable to all individual taxpayers, but it applies only to domestic corporation. The NIRC did not impose final capital tax on our capital gain tax on foreign corporation. However, in cases where foreign corporation realize gains from the sale of real property classified as capital assets, the capital gain shall be subject to regular income tax. The sale of the real property located abroad is not subject to capital gains tax since withholding of the capital tax cannot be imposed abroad due to territorial consideration. May kanya-kanya sila, bawat bansa ay may kanya-kanyang tax rules. So, since the actual gain realized on the sale, exchange, and other disposition of properties abroad are subject to regular income tax if the taxpayer is taxable on global income such as resident citizens, and domestic taxpayer is taxable corporation. For all other taxpayers, the capital gain realized abroad is exempt. We have two exceptions to the 6% capital gains tax. First is the alternative taxation rule, and second is the exception under special law. And under it, we have exemption under NIRC and exemption under special law. We also have alternative taxation. So una, the 6% capital gains or the regular, pangalawa is the regular income tax. It should be noted that this is permissible only when una, the seller is an individual taxpayer, and pangalawa, buyer is the government, its instrumentalities or agency, including government-owned and controlled corporations. In this case, we have illustration. Gretchen sold the government a vacant lot for 800,000. The lot was purchased for 200,000 in 1980 and had an assessor's fair value of 400,000 and zonal value of 500,000 at the date of sale. So Gretchen may opt to subject to tax at 6% of 800,000 pesos or report the 600,000 pesos. Kasi paano nakuha yung 600,000 pesos? Yung 800,000 pesos less yung 200,000 na the purchase value niya, actual capital gain in her annual regular income tax return. So basis of alternative taxation, the alternative taxation is intended to ease the burden of government expropriation where taxpayers may incur losses in the first expropriation sale and are still required to pay tax. So, another illustration. An individual taxpayer bought a house and lot near a highway at a cost of 2 million. After several years, the government invoked its power to eminent domain to buy the property for the expansion of the highway. Assuming the property has a fair value of 1,800,000 for purposes of expropriation, the taxpayer would be forced to incur 200,000 loss. So 1.8 million minus 2 million. So and still pay the 6%. Exemption to the 6% capital gains tax under the NIRC. The sale, exchange, and other disposition of a principal residence for the reacquisition of a new principal residence by individual taxpayer is exempted from the 6% capital gains tax. Principal residence, ano ba yung ibig sabihin? Yung a house and lot which is primary domicile of the taxpayers. If the taxpayer has multiple residences, his principal residence is deemed that one shown in his latest tax declaration. So we have requisites of exemption. Una, the seller must be a citizen or resident alien. Second, the sale involves the principal residence of the seller taxpayer. Then, the proceeds of the sale is utilized in acquiring a new principal residence. Number 4, the BIR is duly notified by the taxpayer of his intention to avail of the tax exemption within 30 days on the sale through a prescribed return. So, yung form na, is, yung BIR form na 1706. And sworn declaration of intent. Number 5, the reacquisition of the new residence must be within 18 months from the date of sale. Number 6, the capital gain is held in escrow in favor of the government. Then, the exemption can only be availed of once and every 10 years. 10 years lang. The historical cost or adjusted basis of the principal residence sold shall be carried over to the new principal residence built as required. It must be emphasized that the sale of principal residence must be proceed. Acquisition of the new principal residence to the exemption. We have here an illustration. Gamboa sold her principal residence with a fair market value of 6 million for 5 million. Gamboa purchased the residence for 3 million several years ago. The imposable capital gains tax is 6%. So 6% of 6 million is 360,000. So Gamboa should indicate her intention to apply for exemption in the capital gains tax return to be filed and submitted a sworn declaration of intent. She will be required to deposit the 360,000 capital gains tax in an escrow account in favor of the government. Full utilization of proceeds is exempt. Assuming Gamboa acquires a new principal residence for 5,200,000 within 18 months, the 360,000 capital gains tax is escrow will be released to her. If Gamboa does not acquire a new principal residence within 18 months, the capital gain tax is, in escrow will be taken by the government. Basis of new residence with full utilization. If the proceeds is fully utilized, the tax base of the new residence shall be the basis of the old residence plus additional cost incurred by the taxpayer in acquiring the new residence. The additional cost in the excess of the purchase price of the new residence over the selling price of the old residence. Thus, the tax basis of the new residence shall be ganito. Basis of old residence, which is the 3 million. I-add natin ngayon yung additional out-of-pocket cost niya na yung 5.2 million minus 5 million. So that is 200,000. So the basis of new residence ni Gamboa now is the 3,200,000. Tax basis has no relevance for real property capital assets because the actual gain on the sale is irrelevant to capital gains taxation. However, when the real property capital assets subsequently qualifies as ordinary assets, such as when they are later employed in business, the tax basis of the property becomes necessary for gain or loss measurement. That's why the basis of new property needs to be monitored. Now, let's proceed to partial utilization of proceeds in partially exempt. Assume Gamboa uses only 4,500,000 out of 5 million proceeds in acquiring her new residence. Kanina, full ha, di ba 5 million, 5.2, so 5 million ngayon is, ano na lang, partial, 4.5 lang. The capital gain tax held in escrow account, including any accrued interest, shall be allocated as follows. To Helen, which is Helen. Kasi siya si Helen Gamboa. 324,000, 4.5 million divided by 5 million times 360,000 plus yung to government na 36,000. Yung 0.5 million, kasi di ba 5 million, tapos 4.5 million na lang. So, divided by 5 million times 360,000. Yan nga, 36,000. So, the total amount in escrow now is 360,000. So, let us take note that any interest which might have accrued to the escrow fund shall be released to the taxpayer. The government is entitled to the amount of the unpaid tax only. So for the tax basis of the new residence with less than full utilization, if the proceeds is not fully utilized, the tax basis of the new residence shall be reduced accordingly by prorating the old basis as follows. So tax basis of the old residence times utilized proceeds divided by total proceeds. The total tax basis of the new principal residence shall be computed as 3 million 3 million pesos times 4 million pesos, 4,500,000 pesos divided by 5 million. So that is 2,700,000. Capital gains tax exemption under special laws. First is sale of land pursuant to the Comprehensive Agrarian Reform Program. The sale of agricultural land by landowner pursuant to Comprehensive Agrarian Reform Program of the government shall be exempt from capital gains tax. Similarly, interest income on the selling price that may have been agreed by the landowner and the tenant buyer shall be exempt from income tax. Second is the sale of social housing unit by the National Housing Authority. The sale of socialized housing unit of the underprivileged and homeless citizen by the National Housing Authority or NHA pursuant to the Urban Development and Housing Act of 1992 is exempt from the capital gains tax. This exemption is limited to socialized housing unit only. The BIR ruled that the sale of the NHA of commercial lots, which is not part of the socialized housing project for the poor and homeless, is subject to capital gains tax or regular tax and documentary stamp. To qualify for the exemption, the socialized housing unit of the NHA must comply with price ceiling set by the NIRC and other special law. So ngayon, the payment of 6% capital gain tax installment. The capital gain tax may be paid in installment under the payment term. The initial payment does not exceed 25% of the ceiling price. Then, the initial payment refers to the collection. When we say initial payment, that refers to the collection in the taxable year the sale is made. Now we have here an illustration. Without mortgage. On December 1, 2021, Miss Batangas sold for 4 million an unused lot with cost and fair value of 2 million and 5 million respectively. The buyer agreed to pay 500,000 monthly installments starting December 31, 2021. So the capital gains tax is 300,000. Bakit? Ano? Kasi 5 million, itong 5 million, times natin sa 6% na capital gains tax natin. Kaya nakuha natin yung 300,000. Then, yung initial payment niya nung December is 500,000. Ang ratio natin ngayon of initial payment is 500,000 divided by 4 million. So that is 12.50%. The installment sale qualifies under the ratio ceiling. Hence, the capital gain tax payable every installment shall be 37,500 computed as 500,000 divided by 4 million times 300,000. Now, let's proceed to illustration 2, without mortgage in excess of cost. Assume that the lot in the previous illustration is mortgaged for 1 million, which is the buyer assumed and the buyer agreed to pay the 3 million balance in 300,000 monthly installments starting December 31, 2021. So, ang capital gain tax natin ngayon, the 5 million times 6% is 300,000. Yung initial payment niya, na 300,000 noong December, mayroon tayong ratio of initial payment na 750%. Sana naman galing ng 750% doon sa 300,000 divided by 4 million. The contract price shall be computed as follows. Yung ceiling price ng 4 million. Yung less mortgage ceiling price na 4 million. Mortgage assumed by buyer na 1 million. So, contract price natin ngayon is 3 million. The capital gains tax payable every installment shall be 30,000 pesos. To compute for the capital gains tax, initial payment divided by agreed or contract price times capital gains tax. Now, let's proceed to illustration 3. Assume further that the mortgage is for the lot is mortgaged for 2,500,000, which the buyer assumed and the buyer agreed to pay 1,500,000 balance in 300,000 monthly installments starting December 31. So ngayon, capital gains tax, which is the 5,000 times 5 million times 6% is 300,000. The contract price shall be computed as follows. Yung ceiling price na 4 million, less natin yung mortgage assumed na 2.5 million. Cash collectible natin ngayon is 1.5 million. I-add natin ang constructive down payment, yung excess mortgage. So, yung 2.5 minus 2 million na cost. So, that is 500,000. Ngayon, ang bagong contract price natin is 2 million. The initial down payment shall be computed as yung constructive down payment natin na 500,000, yung installment natin noong December 31 na 300,000, therefore, the initial payment is 800,000. So, for the ratio of initial payment, that is 800,000 divided by 4 million, so that is 20%. The installment plan qualifies under the ratio ceiling, hence the capital gains tax can be paid in installment. Under the installment method, the capital gain tax payable shall be, for the sale, we have 500,000 divided by 2 million times 300,000, so that is 75,000. For every installment, so yung 300,000 divided by 2 million times 300,000, so that is 45,000. Now, let's proceed to illustration 4. 4. This is the initial payment exceeds 25% of the ceiling price. Assume that the initial payment on the sale of Miss Batangas exceeds 25% of the ceiling price. The sale would be taxed as if it were a cash sale. The capital gains tax shall be paid in lump sum. Upon filing the capital gains tax, this applies without regards to whether or not any mortgage on the property exceeds the cost of the property disposed. So, kailan naman ang deadline for capital gains tax? So, una, magpa-file tayo ng BIR form na 1706. So, syempre, ang rate natin is 6%. It will due within 30 days from the date of sale or exchange. Foreclosure sales, it will due within 30 days from the expiration of the applicable statutory redemption. Ano naman yung documentary stamp tax on the sale of capital assets? So this is the sale of domestic stocks is subject to a documentary stamp tax of 150 for every 200 of the par value of stocks sold. And ipaput natin to illustration. A taxpayer sold domestic stock with total of par value of 800,000 for 1,200,000. The stock have a fair value of 1,250,000 and were acquired for 1 million. So ngayon, yung selling price, which is the 800,000, then ang tax rate natin na 150 peso per 200. Ngayon, ang documentary stamp tax na babayaran is 6,000 pesos. The documentary stamp tax on the sale of real property. The sale of real property, capital assets, is subject to a documentary stamp tax on the gross selling price, the selling price, or fair market value, or whichever is higher. The documentary stamp is 15 pesos for every 1,000, and fractional parts of the tax basis thereof. However, if the government is a party to the sale, the basis shall be the consideration paid. Illustration. A taxpayer disposed a real property capital assets acquired for 2 million 10 years ago. So, for 4 million, gibakal niya sa 2 million 10 years ago. Tapos ngayon, binibenta niya sa 4 million. The property has a zonal value of 5 million. undeclared real property value for real property tax declaration of 3 million. Now, the documentary stamp tax shall be computed from the fair value. Kasi nga, di ba, which is higher. So, 5 million, then sinasabi, ang tax rate is 5 pesos for every 1, 5 ba? 15. 15 pesos for every 1,000. Therefore, the documentary stamp is 75,000. Lucky. Now, let's proceed to penalties for late filing for non-payment of capital gains tax. The late filing and payment of capital gain tax at the time or times required by the law is subject to a penalty of 1,000 for each such failure, provided that the amount imposed for all such failure during a calendar year shall not exceed 25,000. So, entities exempt from capital tax. Una, foreign government and foreign government-owned and controlled corporation. Pangalawa, international mission or organization with tax immunity. Pangatlo, general professional partnership. At pang-apat, qualified employee trust fund. So let's compare comparison of the 6% anong CGT, capital gain tax, and 15% capital gain tax. So, pag tax objective, gain or real property is subject for 6% and gain on sales is subject for 15, gain on sales of stocks is subject for 15%. Basis of tax, presumed again, then para sa 6% is presumed gain, and for 15%, actual gain. So, for the nature of tax, we have final tax. For 6% is final tax, while for 15% is self-assessed tax. For frequency of payment naman, for 6%, that is per transaction, and for 15%, that is transactional and annual. So, that's the end of our report. Our group members, our leader is Miss Cinderella Saling. The members are Annabelle Sibrania and yours truly, Mariana Lee. Thank you.